Welcome, homies, to the one and only series of What is Choch? I'm also going to throw in what flips are as well. Just to kind of solidify what Choch is, what it means, it's simply change of character. It simply is if the market's doing one thing, i.e. we are maintaining higher highs and higher lows, right? And then all of a sudden we stop this and do the opposite, i.e. break a higher low, then this becomes Choch. Now we only mark the top here as Choch to showcase the movement of boom, 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 boom. That is the only reason we mark it. I know people are like, but you could mark this and you could mark this and you could mark this. Yes, you could, but none of these lows get taken out. Okay, so we literally mark Choch, right, at the top and bottom, or at the bottom and the top. It's simply that easy. And we're doing this mainly on the M15 and on the 1 minute. You can look at it on the 4 hour, but please don't get lost where the swing points are. True boss is swing structure only. And to be honest, me and most of the team, we focus simply on swing structure and Choch. We're not always marking sub boss, minor boss. Personally, it can get a little bit chaotic and you don't need it. And again, trading's about keeping things very simple. So again, right, higher highs, higher lows, higher highs, higher lows. Okay, all of a sudden, boom, boom, Choch, right? Now, the reason I mark the top one is because a lot of people might get confused. If we do something like this and break that low, people think, oh, Choch. No, because the high never broke, which never confirmed that as the low. So this is still the low. So this is not a boss and then or a Choch or anything. So if you set an order here, it's going to do that. Then it's probably going to Choch, and then you're going to be like, oh, the market hates me. No, you just didn't read things properly. Like, that's it. So that's why we mark it on both. Okay. Now, if we've got it in a downtrend, right, and we are lower highs, lower lows, lower highs, lower lows, and all of a sudden, we pop a lower high. We had to break this low to confirm this is a new high, right? So then we had Choch. We took the low, confirming the low break. We confirmed the new high, and then we took the high. Choch. That's literally it. Yes, you can mark this if you want as breaks of structure or Choch or whatever you want to mark it as. But until the lower high in this instance fails, it's not a completed Choch. It's that simple movement. It's just a shift or change in momentum, whatever you want to call it. You can call it Nan farted. You can call it Granddad sniffed his feet. You can call it whatever you want. As long as you understand the concept, you'll be fine. You don't have to mark the high go. You can just mark the low go. But please remember, boss is swing structure. Choch is the first sign of trend change. And we'll use wicks for Choch, but we will use body breaks for swing structure. It's really important that you get this in your head and go on the charts and look at examples. Again, we're doing it at mitigations, not just in the middle of anywhere, because that leads to absolute chaos. Okay, so if I get rid of that, and now if we look at some examples, right here, we put in this high, we had a pullback. It's really important. If each candle trades above one another, then it can't confirm that as the low because there was no pullback, right? Remember, this is Choch, not boss. So we had a pullback. We took out the high. I would mark the high failing to show me and you guys that we now have a new low, right? As soon as the shift is literally like this, boom, 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 right? Or I'll do it upside down now and mess it up. Boom, 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 right? Choch. Yeah, Choch, right? As soon as we see that here, Choch, we've had a change of character. Oh, look, we're in a 4 hour mitigation. So we can go up and we can track back to what did this hit. And on this instance, it hits a 30-minute POI, which is basically the 15-minute range here. And if we go to the 30-minute, you'll see we hit this 30-minute candle there. And that is now valid to trade from. And you can get in here on the 1 minute and you can target this low. And bosh, all of a sudden, you know, bang as a mash, right? Now, here, we come into this demand, right? You want to see Choch. Okay, well, this trades at this low, this trades at a new low, then we have a pullback, then we take out this low. So there's the low failing, which confirmed this high. There's the high failing, this is Choch. This is what caused Choch, right? Sorry, I've drawn that the wrong thing. This is the wick, or this candle if you want, that caused Choch. So you can look here for an entry long, okay? And then we just start to build off it here. Again, right? We're at another higher time frame mitigation if you're following the 15-minute. This candle trades at a new low. This candle trades at a new low. This candle pulls back. Then what happens? We take out the low. We take out the high. What does that give us? Low's gone, high's gone. Choch. Now we can trade from this. Boom. Okay? That's literally the concept. We then have another Choch. Be so careful, that's a different word, mate, when you keep repeating this, I'm telling you. Here, right? So we have this low, okay? Price then pulls back, right here. So we put in a low, we put in a new low, okay? This I don't think gets broken. What are we? 5,890, 5,891. So this takes out that low ever so slightly, right? Which then gives us this as our high, okay? So you can, at this point, from here, say this is Choch, and you can trade from this. Be mindful, this is all against trend, right? We're just building a huge pool of liquidity to run, okay? It's the same up here. And we're using it in mitigations. We're not doing it, right? If it Chochs here, I ain't getting it. I'm not bothered. I don't care. No way. It's got to be out of mitigation, 15-minute or above, okay? Up here, we mitigate this guy. Okay, and you can say with my trading, I want to wait for 15-minute Choch to realign. Okay, fine. Well, what happens? This trades at a new high, this trades at a new high, this pulls back. We take out the high, so we mark the new high. This confirms our new low. We take out the low, we have a valid level to trade from, so there's Choch. Boom, we take shorts, off we go. Okay, that's literally Choch. Like, it's the most simple concept. Once you see it, you'll never unsee it. Now, I know you might be like, why do you put Choch, mate? Like, it was just something that came to my head, and I think I was talking to Nora, and we said Choch. It means, yes, it's change of character. Yes, it's a Wyckoff theory. We're not claiming to own the name, but we're using it in a different way that I guess can cause some confusion at first. But when you understand how powerful it is, and you just go through the charts, go to any higher time frame mitigation, and then go, oh, look, we chopped. Oh, okay, I can now play off that with confidence because it's given us the possible trend change. It's the same with our entries on the 1 minute. We want to see Choch to get involved. So if we now go to the 1 minute, oh, mate, where have I gone? Woo-hoo. So if we go up to the 1M here, straight away, right, you can see. So here, look. This is our high. We had a pullback, put in a new high, that confirmed the new low. We broke this low, so there's our change of character. Okay, that's Choch, right? Obviously, in this occasion, there's no entry. You don't get in, right? Then this is a 15-minute POI, right? Come in. We take out the high. We take out the low. Choch. All we've done is this movement. We've gone high, 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 low, high, 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 low, bosh, bosh, come back in, see you later. It's just the reason we mark it at the top isn't to say, yeah, trend change is going up. It's to show when we're doing markups that that high failed, which confirmed it as a new low, which now we compare it with Choch, we can now trade directly off something in here. That's the only reason we mark it in that way. You can just put a line here and go, yeah, it's Choch, providing it took the high and you're aware of it. But for the sake of putting a line there to be aware of it, brilliant. And I know someone might be like, but what about the ones to the left? That's then Choch. Yeah, mate, that's Choch at the high, but it didn't take the low. So Choch never got completed. So it's not a Choch. That's it. It's got here. We take the high. We never take the low. Choch has not completed. You can mark the high. The minute it takes it and then takes the high again, delete the Choch line, go to the next one. Delete the Choch line, go to the next one. Once the low fails, now you can go, all right, now we've had Choch, and it's usually happening at higher time frame mitigations. Like I say, it isn't a hard topic at all. I just think it's being seen out of context. This is going to be in the Watch Choch channel. Please go over this and then go to your charts and then re-go over it until it literally makes complete sense. It's literally used on the 15-minute and the one minute. You can use it on the 4-hour, but just don't get lost in, oh my God, where am I? Because it will cause chaos. But here you could say, look, we took out this high because this trades at a new high, this trades at a new high, that pulls back. So we took out this high, we took out this low. We've completed Choch on the 4-hour, so we can trade from it. That's all it is, right? What we're not doing is doing it in the middle of, like, say you've got supply here, demand here, and then in the middle, we're chopping up, chopping down. We're not trading that because it's not hit a level. So forget that until it hits a supply or demand level, then look for it. And honestly, it's a very powerful concept. It's not some fancy term we made up because it's like, oh, yay, let's make up funny names. It's because it's super powerful and it changes the kind of trajectory of a lot of your trading. If you're always waiting for swing breaks, you can miss a lot of moves. If you want to play pullbacks, you're not playing a pullback because it likely won't break structure on a swing perspective, so you're never getting a pullback. If you play Choch, you can get in a pullback. It's as simple as that. This short is a pullback on the 4-hour because it broke swing structure, which gave us a new low and a new high. If you're not going to trade until one of them fails or it comes back here, then you're missing out on opportunity because you can take shorts into this to take longs, but you need Choch to give you that way in. That's all it is. Okay, so now I just want to go over flips quickly. Flips, again, a very simple concept. It reacts to a level of demand or supply and it fails. So if we have a supply zone, right, and we have come out of a demand zone and we are, let's say we're in a higher time frame mitigation here, we've hit it, price is pushed up, it needs to react. If it just blows through it, it's not a flip. You need to see a reaction. Usually in this instance would be a sell candle. And then if it takes that out, that there is your flip, which then gives you this to trade from. And then you can trade from that and bosh. Obviously, we have said previously, if the decisional, this is the decisional, this is the extreme. If this doesn't take out liquidity, likely it can become inducement for the extreme. But that's a whole different video. Right? That's in a lot of my trade recaps, so go check those out, right? If we're looking at it from this perspective, that's all we're looking for. Now, a supply level or demand level is only valid if it causes a break of something. It must break something, okay? If it doesn't, then it's likely not going to work and it becomes invalid, okay? So if we go to any time frame, right, is it working? We've got this, for instance. So this occasion, right, you have this kind of range, right, on the 15-minute acting as supply. You can, of course, go lower and find out what it hits. Here, we hit it, and then if we go to the 10-minute, as we come into this range, right, we hit it, we pull back with a doji, and then we break it, right? Now, this is signifying to us that at that point in time, there were sell orders pumped into the market, but there wasn't enough of them to take control, and demand took control. So what that shows us, on this specific demand level, there is likely still resting orders that need to be filled. Do not tell me that's a coincidence that all of a sudden price comes back to that, pings it, and goes and puts in a new high. It's not. It's just how the market works. And these are happening everywhere. When you see markets stop dead, look left. What did it hit? Oh, look, this is actually a flip off of a range. Now, obviously, you can, and it's preferable to trade it directly off of a single kind of candle. It makes things a lot easier. But this is what we're using when we play our entries. Okay, like if you look, this is real messy PA, but I want to try and find some examples within this that are clean. Probably not the best place to look for them. We go to some other data. Yeah, there's pretty crap as well. I want some nice stuff for you all. What's that hit? It's miles away. Okay. Here, right? We reacted to this level of demand. It's a sweep, and it breaks this level of structure, right? Price then comes back to it here, okay, and it reacts. It tried to put in a high, failed. This candle caused the failure. So then you spam that across, right? And likely, like magic, price will hit it and you'll see a reaction. So it adds confluence to our higher time frame mitigations. As you can see here, look, see you later, mate. And we go and put in a new low, just like that, right? So it adds that, it does add confluence. It doesn't have to be like that on a higher time frame, but for an entry, I will only trade if there's a flip. So again, if you go over all the trade recaps now, you'll see that all of them, the entry wise, they're flips. But if I just show one for the sake of the video, if we go to this here, so here we've taken out, you know, we've had this mitigation, right? We've taken out this high, we've taken out this low, we've chopped. These are buy to sell candles. We tried to buy and it failed. So it creates a supply zone. You can go down a time frame until you can make sense of it if you want to, right? Here you've got 5 minute, you've got a wick popping up and whatnot. You can go down to other time frames. You might make it cleaner, but straight away I'm like, that's a valid level to look to trade from. And then if we just cut price here, so I can show you, if we go into the 1 minute here, right, we can see that price is reacting to these sell to buy wicks that are acting as our demand here. Sell to buy, takes out this high, valid level, right? We mitigate into it. Now, until this is broken, it's not a flip. So you can put a line here and you can say, right, there's my flip, okay? Now, boom, it's broken. Now you need to go and gather data. Are you happy to play it with simply a wick break? Do you want to see a body break? Personally, I play both, but I've got lots of data on it. You need to go and do the same, right? It's broken this level. We can track back and see that this candle took out this candle liquidity, and this was the push that caused this demand to fail. So at this point in time, the market supply took control of the market and likely has resting sell orders sitting here. So what we can do is we can set a limit off of this, trading it with confidence. What do we also have? We have Choch. We took out the high, and this one actually took out the low. We have a change of character. We've swept liquidity. We have a V-shaped recovery. We have a flip. We're ticking boxes. We're ticking confluences. We can now enter a trade. We can put that trade there. We can play simply the wick because it's a sweep and it's mitigated this extreme. So if it's valid, it shouldn't go any higher. We can put this on there and we can comfortably say, we'll take this with a 2-pip stop like that. And we will play this trade on. And again, right, off you go. Here, looking to the left, we had a reaction to this demand. Price pushed up. Price tried to put in new highs. It never put in new highs. We then had another attempt. We reacted. Price pushed up, swept this previous candle high, and then took out the demand. So at this point in time, supply took control of the market again, and more orders were pumped into the market. So we can take this trade from here, and we could get in again and again. And we can literally just follow the logic of the market built with a higher time frame story, right? And it's literally the same thing over and over again. The flip is just another added confluence we like to see for entries or for our POIs, right? And then you get in and off we go. And you go and hit your target, wherever that may be, here, right? Boom, you've just made a load of R. 8R, 8R, cool. Like that's literally it in a nutshell. I hope that makes sense. It should, because that's literally the concepts. Now what you need to do is look at the team markup section, look at the team trade section, look at the trade recaps on the website, go over these in detail, and you'll start to see how everything that we're saying to you in the chats on a daily basis is exactly the same. And what you're probably doing is overcomplicating things, or you're still focused on other strategies or methodologies that you've learned. If you can unlearn those and focus specifically on this stuff, you'll be absolutely flying. I love you all. I hope this really helped. Peace and love. I'll catch you in Discord.